All right, well, good morning, everybody, and thank you for taking the time to join us for our seminar on how to complete the loan forgiveness for your PPP loans. This has been kind of a whirlwind experience for all involved, from the initial just sprint to go and get loans registered before the funding ran out.
I got the passport and I got the passport card and I'll get the ID.
Then get into the next round where everybody was thinking the same thing was going to end up happening, and then find out that money was able to kind of stick around for a lot longer. So, but do appreciate you guys taking the time to join the webinar today. Hopefully we can be a little bit of assistance to you as we get into this next phase, which is the filing for the forgiveness. And so the way that this will work is this will be following a PowerPoint. Each of you should be seeing a PowerPoint on your screen. If not, you should see it at the bottom of your screen. You're able to pin it to your, to be able to pin the PowerPoint. And what that'll do is just keep it front and center for you. But I believe that that should just be the default, given how we set this up on the front side. So, and today we're going to be focusing in on the forgiveness form for the easy form, which is one of two. And we will just kind of get rolling. This is going to be much more of a talking to you presentation for the beginning. If you do have questions that come up, we want to be able to answer those as well. And what we do is we ask that you go and enter those in through the chat feature inside of this software. And then we have some people that are monitoring the chat. And then at the very end of this, we'll go through what questions that people have. So you can go and log your questions there and we'll attack those at the end. And then any that we don't get, what we'll do is we'll ultimately be recording this and posting this onto our website. And then any questions that we don't get answered, we're going to have a frequently asked questions section on that website as well, where we'll go and provide updates on any questions that we didn't get covered, or even questions that we did cover here for people that weren't able to attend. So with that, we'll get rolling. So again, this is on the PPP Loan Forgiveness. How do you do the application to get that loan forgiven? All right, so the first thing is just going to give you guys an idea of what it all is that we're going to be covering. So the first thing is obviously we got to figure out where to even find the application. Next, we'll work through how do we complete the application. And again, today we're going to be focusing on the easy form and the criteria that determines if you're one customer who is able to use the easy form. We'll cover what supporting information you need to be able to provide. We'll talk through any timelines or deadlines you need to be aware of. We'll also give you some just program updates to PPP in general. And then we'll end again in the question and answer area. And again, if you have questions along the way, please use the chat function. We've got some people paying attention there, and they will compile those questions so we can cover them at the end. All right, so first off, we're going to cover just where to even find the application. So you have two options to enable to do this. The first option was actually we went and had sent out the two applications in an email a little while ago. So you should be able to get a copy of them from there. What that does is that actually linked to the Treasury website, and the Treasury website is the other option for finding it. And it's actually very simple to find. It's just www.treasury.gov. And then there's this big red banner right at the top of the page. So in there, there's a link that says click here, and that'll bring you into everything PPP. And so when you click on the link, it's going to bring you into an area of the website that looks like this. And what they do is they break down the website into stuff that's more borrower related and things that are more lender related. And for the loan application or the loan forgiveness applications, those are all covered right there. And so what ends up happening is there's two different forms. There's an easy form and apparently a not easy form. And then with each one of them, they come with its own instructions that'll give you some extra definitions and things you need to just know when filling that application out. So again, there are two applications to work with, one that's the easy form and one that's the standard form. And obviously the first question everybody's going to have, well, which one do I need to complete? And so the way to figure out which form that you can use is inside of the easy form instructions, there's a checklist. And it's 3 questions. If you can say yes to any one of those 3 questions or criteria, then you can use the easy form. If you cannot say yes, or you say no or NA to all three of them, then you need to use the standard form. And so we'll do kind of a quick run through of what those criteria are. First criteria is if you're self-employed individual, independent contractor, or you're a sole proprietor with no employees. So think of it kind of this way, that if you alone are your business, you say yes to this. This is basically the do you have employees question, because if you don't have employees, you get to use the easy form. But if you cannot say yes to this one, then you'll move on to the next criteria. So now the next two is where it gets a little bit more complicated, and I'm pretty sure the way that government forms work is they get paid by the page that they can produce, because a lot of these things get very wordy, but I'll try to break them down in a way that's easiest for people to understand, and it will kind of come clear once we wade through a little bit of their definitions. So criteria 2 is you need to be able to say yes to both of the statements within criteria 2. The first one is about did the borrower did not reduce wages for any employee by more than 25% during the covered period. And so what that means is when they say wages, that's the per hour that you're paying these people. So if you're paying somebody $15 an hour, did you drop somebody from 15 more than 25% during your covered period? And the covered period is the time immediately following when you got the loan. And then what you're going to do is you're going to compare that to, well, what were they essentially pre-pandemic from 1/1 to 3/1 or 3/31. So if you can say that you did not do that, and then next is you did not reduce the either quantity of the employees or the amount of average paid hours that those employees worked. And again, it'll be something compared to a period of time between January 1st and the end of that covered period. So this is where things like quantity of employees and just how often or how long each of them got paid for during that time. So, and one thing that we've seen some other people have done where people had, say, reduced work, so they had reduced hours, but what they did is as long as they use the PPP funds to still pay them for the full 40 hours that they typically worked, they would be able to say yes to this criteria. So again, in this case, you have to be able to say yes to both of these statements. And if you do, then you can do the easy form. If you cannot, then you move on to the next criteria. And what the next criteria is, the first part is the exact same as criteria 2. Basically, you just can't reduce employee wages by more than 25%. And one thing I did forget to go and highlight in the last one is you see the little asterisk next to the word employee. This only applies to employees that were making cash compensation. So this is like wages, not including health insurance or retirement. This only is if you adjust employees who were making less than $100,000 and you drop their wages more than 25%. So basically what it means, if you had a high paid employee, I guess you can adjust their wages down 25% and still be able to check the box that you can to use the easy form. It's just you can't reduce an employee who had a cash compensation of $100,000. You can't reduce them more than 25% and use the easy form. So again, okay, so criteria 3, the first part is the same thing as criteria 2, but the extra thing that they add is they basically give you the pass if you were needing to shut down just because of a government mandate. So like if you were a restaurant or a brewery, something where the government said you cannot operate, they say we're not going to hold that against you and you can use the easy form. And so if you can say yes to this, you use the easy form. And if you say no to this, you don't go to question 2, you actually will at this point go to the standard form. So to kind of summarize criteria 2 and 3, confusing. There's just a lot to kind of be able to talk through on that one. Here's the way that I kind of look at it, and it was a way that made a little bit more sense to me. You know, the overall goal of the Paycheck Protection Program is to just protect people's paychecks and keep them employed during an unknown period of time. And so if you think about what your payroll costs is, if you break it down, it's the wage times how many hours that you paid them for times the number of employees that you have. And what criteria 2 says is, all right, if we break those things into pieces, the wage, you can drop that by up to 25%, again, for employees making less than $100,000 a year, but you are not allowed to make any changes to their paid hours or the quantity of employees. Then on the flip side, criteria 3 says something similar, where you can drop the wages by up to 25%, and then it's okay if the paid hours and the employees went down, as long as it was you being compliant with government rules and regulations. So hopefully that will kind of make it a little bit clear as far as what the intent of what those criteria are trying to do. The overall, and again, it really all heralds back to what the goal of the program was, which was keeping people employed during a weird period of time. All right, so then when we get to the end of this, if you can say yes to any of those 3 criteria, you get to use the easy form. If not, you use the standard form. Now, a lot of the things between the 2 forms are the same. The only thing that gets the weirdness on the standard form that you got to work through is when you did say reduce employees or reduce paid hours, there's just some extra calculations. But today we're going to be covering the easy form. If after you went through this, you said, oh crap, I'm in the wrong one, we are covering the standard form tomorrow, so you can feel free to join in for that one as well. All right, so then back to where we can find the application. This is again within the Treasury website. Now that we know that we're working on the easy form, it'll just be the 2 that I have circled on the screen now. So there's the easy form along with the instructions. And when you get into the application, it's more or less a 2-page application. Can seem like quite a bit, but the way that we're going to work through it today is we're going to break this form into 6 sections and attack each piece by piece. And again, what those 6 sections are, the first part is pretty easy, it's a contact information. Next is some specifics regarding your PPP loan. Third, talking about the covered expenses. So this is the total of all the expenses that qualify towards forgiveness. Part 4 will be tying it all together and figuring out what the actual forgiveness calculation is. Part 5 is talking about certifications. So things that you're saying essentially that you're following the rules that the PPP program puts out. And then part 6 is some demographic informational that is optional. All right, so first part is the contact information. In this part, I'm not going to spend a whole lot of time on because it is pretty self-explanatory. All it essentially is name, address, and contact information. The next section is going to be kind of things that are specific to your PPP loan. Now, to help you guys fill this area out, there's some information that you yourself don't possess. And so what we had done is a few days ago, we had emailed each PPP loan recipient with some of that extra information that we had. So things like the loan number on the SBA side, you guys did not have. So we went and sent out that email to each of you with that information to just kind of help with this process a little bit. So again, those green areas are the areas where we had sent that information out on the email. Next one is on the employees at time of application and the employees at time of forgiveness. Now, one thing to note here is this is total number of employees, not something like full-time equivalent employees. This is more of a head count type of number. And so again, and basically what we're doing is we're comparing it from what it was at application to what it is now at forgiveness. And if you don't have a copy of what your application was and you don't remember exactly what number you put into there for the employees at the time of application, go ahead and contact your banker. They still have a copy of your application and they can get that over to you if you'd like. All right, so next one talks about the EIDL advance amount and the EIDL application number. So what the EIDL is, since government stuff always comes out with really poor acronyms for things, that is the Economic Injury Disaster Loan. and this was another funding source to get funds to customers that needed them. And we're actually going to talk a little bit more about that on the next slide because people have more questions on, well, what does that have to do with PPP? So push pause on that one. We'll talk about that a little bit more on the next slide. Next section is the payroll schedule, where you just indicate what your payroll frequency is. One thing to note for people that are maybe self-employed or they're a one-man shop, typically those people, say pay their wage kind of more on a infrequent or weird basis, just depending on when money comes in. Go ahead and use that other box to indicate that. All right, so next we get into the covered period and then the alternative payroll covered period if applicable. So what the covered period is, that is the period of time after receiving the loan funds that you have to use up all of the loan funds for forgivable purposes. So when this whole program started, that was a 8-week period starting the day that you received the loan. So if you received the loan on April 3rd was day 1, and then it was 8 weeks additional beyond that, or actually 7 weeks and 6 days after that for your 8 weeks. That did change partway through. So about a month or so ago, they passed the Paycheck Protection Flexibility Act, which did change that covered period from 8 weeks to now 24 weeks. And so what that change does is it makes it so that 24 weeks is now the standard. However, if you received a loan before June 5th, which is when that act started, you have the option to choose to do an 8-week covered period if you choose. Again, that's up to you, and it only applies for people who received their loan before June 5th. And so why that makes a difference, a lot of people just prefer, if I'm going to go and get the application, I want to just get the forgiveness application done, 8 weeks, I know exactly what my numbers are and I want to submit it. But with the change that came with the 24 weeks, we anticipate that to have a big impact on the amount of forgiveness that comes along with these loans, which is obviously in everybody's best interest. So covered period, essentially you get to go and choose if it's a 8 or 24 if you got your loan before June 5th. If you got your loan after June 5th, it's 24 weeks. And for that area too, we did include the dates for you in the email based off of when you guys got the loans. So in that email, it'll indicate what that covered period is. Now on the flip side, what the alternative payroll cover period is, what that is let's say that you pay your payroll every other week on a Friday, but you went and got your loan on Tuesday of the week. Well, if you kind of work through your, at the time, 8 weeks or even 24 weeks, you could essentially lose out on one pay period. So what the alternative lets you do is, as long as you pay your payroll on either a weekly or bi-weekly basis, it'll let you change that start date from the day you got your loan to the day of your first pay period following. And in the instructions, it'll give you a little bit more of a kind of a definition of it. But again, that's essentially what it is it allows you to choose a different start date for your cover period, as long as you pay weekly or bi-weekly, to be able to have it coincide with what your paycheck, normal paycheck schedule is. All right, and then the last one is if the borrower, along with affiliates, receive PPP loans in excess of $2 million, check here. And what that is, that's basically the, hey, SBA, feel free to audit me checkbox. So there's been a lot of kind of, I don't know, bad, let's say bad press that's come along with some of the recipients of PPP loans. And so SBA and Treasury's response to that was saying that we're going to do a review of loans greater than $2 million. And what that is basically to make sure that if some business received funds in excess of $2 million, we're going to do an extra review to make sure that they needed it, so that we weren't giving too much money to larger businesses at the expense of not enough for smaller businesses. And so again, what this checkbox here is basically a way for those customers to raise their hand and say, hey, I'm in that box for getting that extra review. All right, so we get into the EIDL. All right, so why does the PPP area ask for EIDL information? And basically the overall goal is there was two funding sources that people had. They could go and get funding for payroll through PPP or through the EIDL. And what the goal with having this on here is they don't want people to be able to double dip. The whole goal with this program was to get people, 2.5 months worth of payroll, or two to 2.5 months worth of payroll. It was not to get that plus reclaim that exact same payroll on the EIDL and qualify for 3-4 months worth of payroll. And this was part of the original PPP application. It asked what type of EIDL loan that you received was. So don't get too worried because this part is not as weird as what you think it is. So what will be required? So if we had it on the original application, the EIDL and the PPP essentially get combined together. So if you received an EIDL before January 31st or after April 3rd, you don't have to do anything. Nothing gets combined. If you received an EIDL between January 1st and April 30th, but it was for non-payroll purposes, so you're claiming it for rent or other business expenses that you had, they don't get combined either. The only ones where it really applies is if somebody received a EIDL loan for payroll purposes between January 31st and April 3rd. That's the only time where it will then need to be refinanced into the PPP. You would have known about this at the application and it would have been prompted on the application. But one thing you guys don't really have to worry about is there were very, very few businesses that actually received an EIDL loan before April 30th. Because unlike the PPP program, where it was facilitated by banks, and the work was essentially spread out across the 5,000 banks in the United States, the EIDL was completed only by the SBA. And so they had a complete log jam at the beginning. And so there was a very, very slow process for people to kind of work through that. So I don't think that there's going to be too many customers that would fall into this area where they have to worry about it because they likely received their EIDL after that April 3rd date. Now, one question that did come up that a lot of people have is, along with that EIDL, there was a what they would call either an EIDL grant or an advance. So people had the question like, oh, okay, so what does that do, or how does that impact my how much I'll receive on the PPP? And the answer is, I don't know. There's kind of conflicting information out there. One document that I read from the SBA says that the grant is a grant is a grant and it doesn't have to be repaid. And then another one says it does. So unfortunately for me, I don't know exactly what the answer is. But when you're filling out this information, the only time where you'll reference the EIDL in any of the numbers or anything is just in this section. It does not impact what numbers we put into the forgiveness part. What ultimately happens if, say, that advance gets netted out, SBA will do it at the point when they receive it, and they'll just issue a little bit less of a forgiveness by netting out that advance. But again, I don't even know if that's the case because the guidance is a little bit conflicted there. All right, so now we get into part 3. So now it gets into the covered expenses. And so what the covered expenses are, those are the expenses that count towards getting your loan forgiven. So again, these things are payroll costs, mortgage interest payments, business rent or lease payments, and utility payments. And so what we're going to do is we're going to break down each of these individually and kind of work through them piece by piece. So first off, payroll costs. So what's inside of payroll costs? So that includes cash compensation. So think of that as just normal wage payments. Any health insurance that the employer paid, you can't include any portions that the employee paid out of their wage, but so it'd be just the employer cost. And then same thing for retirement benefits. That would be whatever retirement benefits the employer paid on behalf of the customer or on behalf of the employee, not what the employee put in. And the last one would be any state and local income taxes that the employer paid due to do their employee on the payroll. Cash compensation gets a little bit more unique, so I want to dive a little bit deeper in there. So cash compensation, it is cash compensation that's paid or incurred. So if it is some sort of a deferred thing, that does allow for some incurred expenses that maybe don't get paid in the, say, 8 or 24 week period. But they do have some caps involved. And there's kind of two different buckets of caps, one for employees and one for owners. So for employees, the annualized, the cap on what any individual employee can count towards forgiveness is what would result in an annualized $100,000 cash compensation. So basically, if you take $100,000, divide it by 52 weeks, that gets you, I don't know, some number that you then multiply by 8, which then gets you to, for an 8-week covered period, the most that any one employee can count towards forgiveness is $15,385. If you use the 24 weeks, it's that same calculation of 100,000 divided by 52 times 24, that gets you 46,154. And so why those apply is just when you're figuring out your employees' cost into it, you can't let any individual employee's cash compensation, not including retirement accounts or health benefits, that cash compensation can't exceed those thresholds. So that's the first bucket, was the employee. Second bucket is on the owner, and the owner they get a little bit more strict on. So the 8 weeks follows the exact same thing. However, it is the lesser of that cap that is equal to the employees, or 8/52 of their 2019 compensation. So what they don't want you to do essentially is, number one, pay a whole bunch to the owner. That's where that $15,000 cap comes in. But on the flip side, they don't want you to raise the owner's income just to inflate your forgiveness amount relative to what their normal wages are. And they've qualified their normal wages as what their 2019 compensation was. And we apparently have a fire truck driving by, so I don't know if you guys can hear that. All right, then so that was how it works for the owner for the 24 weeks, for the 8 weeks. For the 24 weeks, same methodology. However, they limit it to only 2.5 months worth of compensation. So that $20,833, that would be if you took the $100,000 cap divided by 52 times 10, or 2.5 months of 2019 compensation. And again, here the idea is trying to stay in congruence with what the overall goal of the program was, which was to keep employees paid. And so they don't want to have forgiveness amplified or have a loss of employees compensated by an increase in compensation to the owner, and they get the loan forgiven. So that's what those restrictions are. It kind of sucks because it just crimps the amount of forgiveness opportunity from owner wages, but we have to unfortunately deal with the rules that we have. Now, a lot of people that are on this call are people that qualified based off of their Schedule C or Schedule F income, and what they and the documentation refer to that as is owner compensation replacement. So this is, if you're a farmer or if you're a single owner business, that how much did the owner make? Well, it's the owner made how much the business made. And so that was the number that was used to determine what amount of loan you qualified for. And that was by taking that bottom line net income on your Schedule C or Schedule F, dividing it by 12 and multiplying it by 2.5. Okay, so that's how you figured out your original loan amount. Now it's, all right, well, how do you show what my income during the covered period was? And especially because some businesses are seasonal. So they may get a lot of income during the first quarter, or they may get all of their income in the fourth quarter. So how do we show what that payroll cost is during this shortened covered period of either 8 or 24 weeks? And so the way that they do it, For you guys, it's going to be actually super simple because, again, it's just going to work again off of your Schedule C from 2019, that you actually already provided us. So if you are a 8-week cover period, you're going to take that 2019 Schedule C, divide it by 12, and multiply it by 2, and the payroll cost will be whatever that is, with a max of $15,385. And again, that $15,385 is the $100,000 cap that people can receive. Now, the even better thing is, now when we get into the 24-week option, that same calculation goes, but now we can take that Schedule C or Schedule F net profit divided by 12 times 2.5 to get it, again, with a max of $20,833. So what that means is, if you were a customer that you were a PPP loan recipient and you're the only person that works in the business, and so it was, the loan amount was determined based off of your owner replacement compensation, so that bottom line income divided by 12 times 2.5. If you choose the 24 weeks, you'll get 100% of it forgiven just based off of your owner wages, regardless of how much you spent on those other non-payroll things like business utilities, interest, and lease and rent. So that's a good deal for a lot of those smaller businesses that work out for the Schedule C and Schedule F. All right, so then we'll get a little bit into those other payroll costs, and these ones are not subject to that $100,000 cap. So health insurance, it's just whatever the employer contribution towards the health insurance was. State and local taxes, again, employer contributions only. And then from retirement, again, employer contributions only. So you're kind of seeing a little bit of a trend there. This is only costs that the business paid on behalf of the employee. But now when you get into retirement, now here's another area that they want to make sure that that business owners don't take advantage of the situation and crank up the amount of retirement that they paid themselves. And so what they're doing is they're capping that equal to 2.5 months of your 2019 contribution. So if last year the owner put in $20,000 of retirement over the course of 2019, what they'll do is you'll prorate that down to something less than that by taking that 20,000 divided by 12 times 2.5, and that will essentially put a cap on how much retirement forgiveness that you can claim for the owner. And again, that's something that is just related to the owner, not something you have to worry about from a employee basis. All right, next one is business mortgage interest payments. So a couple things to go and just highlight here. So one big thing is, this is the only interest on obligations that you had prior to June or February 15th qualify. So if you took the loan out in April, you can't count it. If you took the loan out in January, you can count it. And again, this is just the interest expense, so not the principal portion. So you can either get a hold of us as your bank or whoever the lender is. And if you don't have that breakdown, you can ask them for what that breakdown is, but you want to include only the interest. Unfortunately, they thought ahead and said you can't prepay interest. So with, again, keeping with the spirit of during this covered period. One thing that has led to some confusion is that when it says business mortgage interest payments, people immediately think, oh, this only works for real estate loans. But if we go and read a little bit further into the definition in the instructions area, it does describe it as both real or personal property. And so what that means is it's not just real estate. It's basically any business loan for a business purpose that interest expense is allowable. All right, next area is business rents or leases. Here, same type of thing. We need to show that the rent or lease obligation was in place prior to February 15th. And why that's important is it's basically the spirit of the PPP is to go and help people maintain where they were, not necessarily expand. And so even though if you got into a new lease in April, that one doesn't count. But if it's a lease that was in place prior to February, that one does. And here too, this is not just real estate. So if you have lease obligations for equipment or other personal property, those qualify as well. All right, the last one is business utility payments. So here, kind of keeping with the same theme, it has to be for services that were in service before February 15th, 20. So you can't go and add internet that you didn't have before because it's going to jack up your forgiveness thing. It does have to be stuff that you had in place prior to February 15th. And things that you can include are how much you spent on electricity, gas, water, telephone, which includes cell phone, transportation, and internet access. Now, most of those are pretty self-explanatory. The one that gets the most questions is transportation. And they really don't give a whole lot of a good definition for it. But of the seminars that I've listened to, a lot of that focuses in on what are those, gas, like those direct expenses for operating your business. So a lot of things about fuel and stuff like that. But again, the weird part is going to be showing what it was during your covered period, because there's a theme of not being able to prepay for stuff. And in the case of farmers, now the spring usually isn't a time that you maybe prepay for fuel. Usually that's at the end of the year. But what they don't want to have you do is to go and buy the year's worth of fuel in May, even though you're only going to use most of it in the fall. So how you prorate that could be a little bit weird, but luckily with the other changes on going from 8 weeks to 24 weeks, we'll be able to include a lot more payroll that maybe these types of expenses really don't ultimately matter in the forgiveness portion. All right, and then one other note on non-payroll costs. So some non-payroll costs, they must be either paid during the cover period or incurred during the cover period and paid on the next regular billing date. So an example would be your electricity bill. Let's say you pay the electricity bill always on the 15th of the month, but your covered period ends on the 1st of the month. That electricity bill that you're paying, a portion of that was for during your covered period. So you can include that prorated down to the days that are in the covered period, as long as you paid them on the normal regular billing date immediately following the end of the cover period. All right, so that takes care of figuring out what things count towards your forgiveness. Now it is figuring out, all right, so how much do I qualify for? So I refer to this as the forgiveness calculation. So line 5 is pretty simple. All it is summing up the total covered expenses that you had. Line 6 is entering what your PPP loan amount. And then line 7 is doing a payroll cost requirement of 60%. And that one gets a little bit, people have questions about that one, so we'll kind of give a little bit of a description there in a second. And then line 8 is you will enter the smallest amount from lines 5, 6, or 7 into 8, and that's how much qualification for forgiveness that you will receive. All right, so what that payroll cost requirement is. So this was something that came along with, actually, it's kind of interesting on during this whole process. There is, all of this was based off of the CARES Act that was put together in late March of 20. And inside of there, they gave essentially the framework of how the PPP program should work. But then the day that they released it, there was this new rule that said 75% of the forgiveness had to come from payroll. And it was interesting because that showed up absolutely nowhere in the actual CARES Act itself. That was just something that Treasury and SBA added because they thought they had the right to. That caused a lot of kind of angst for people because certain businesses maybe were less reliant on employees and more reliant on, say, rent or facilities. And so it would really inhibit them from qualifying for full forgiveness. When they passed that Flexibility Act, that changed that 75 requirement down to 60%. And they clarified that 60% is a sliding scale. So what the sliding scale means is your forgiveness amount will always be relative to the amount of payroll so that we can maintain a 60% ratio. And that's easy to say, a lot easier to understand with an example. So if you have an example of somebody that had a loan amount, they qualified for a PPP loan and received a PPP loan of $100,000. So for them to qualify for that, they would have had to have an average monthly payroll of $40,000. That's 40,000 times 2.5 gets you to the 100. Let's say that during the cover period, they only spent $48,000 on payroll during the cover period. What this calculation will do is it'll say that, well, for 48,000 to still be 60% of the total forgiveness, that will say that, well, to maintain that 60% ratio, the maximum forgiveness that they can receive is 80,000. And that's taking that 48,000 divided by 0.6 to get the 80,000. Now, key thing there, make sure is to divide. Don't multiply it by 0.6 or you're gonna be really mad. It is divide by 0.6. So your end figure should result in something higher than what your payroll cost was. And then on the flip side, let's go for a second example, but in this case, that same company spent $80,000 of payroll during the cover period. We'll go through that exact same math of 80,000 divided by 0.6 says that they results in a dollar value of 133,000. And so that's great because that's higher than a loan amount, which means that they spent even more than 60% of their loan on payroll. And there's no upward limit. You can spend as much on payroll as you like. It's just there's a floor of at least 60%. And so then what this would mean is that payroll cost, line 7, won't limit the amount of forgiveness that they qualify for. All right, part 5 is the certifications. And again, that one's a little bit more self-explanatory. Essentially what it is, it's a regurgitation of the instructions of the easy form, making sure that you were actually allowed to use the easy form to begin with, along with just other, using the funds for the intent of what the program was for, and things like that. So that area I'm not going to focus on too much on because it's fairly lengthy, but it's pretty easy to do, and those need to be initialed by somebody on behalf of the company that can. And part 6 is actually after the signature line, and this is the demographics area. This is an optional area. And it's actually kind of funny because this part, where it comes from is the SBA kind of got their wrist slapped a little bit on how the PPP rollout went. And part of that wrist slap was the fact that the CARES Act required them to collect demographic information on people, and they just didn't. And so now they're trying to make amends by including it. Now, one thing just to note, it is optional, so you don't have to fill it out if you don't want to. And it'll actually ultimately probably save us some work on our side if we don't have to enter it someplace, but that's up for you guys to determine. And big thing to note there is that if you do complete, it's required for any customer that's greater than 20%. So same people, basically the same people that you had to go and provide their names and social security numbers for, you would include demographic information for. All right, then we get into kind of the supporting documentation. And for this one, I'm just going to kind of highlight where you can find this. They actually give a pretty thorough answer on the instructions. It'd be the last 2 pages of the instructions. It goes through what is required to be submitted with the application, and then what other things are not required to be submitted, but you got to at least have documentation for. So pretty thorough. So I'm going to point you and highlight that for you guys to know what is required from that standpoint. All right, so now when do we got to do all this stuff? All right, so one of the things that changed with an additional thing that changed with the Flexibility Act is that now a loan forgiveness app must be filed within 10 months of the end of your covered period. Okay, so it's a long time. We had a lot of time to be able to get the application finished. So technically speaking, if you were to get a loan today and choose the 24-week, and then you have the 24-week thing, that's 6 months from now until the end of your covered period. So we're looking at somewhere around January, February of 2021, and then you have another 10 months past that. So we're looking into October, November of 2021 before we have to have the forgiveness application submitted. So that is the absolute end of when you can do it. Obviously, people want to go and just get this behind them and get the forgiveness amount figured out earlier rather than later. So that's just telling you what the backside is. But you can choose to do it earlier than that as well. So once you complete your side, then us as the bank have 60 days to review that application. And so what we're going to be doing is reviewing the application for completeness and then adequate supporting information. So as long as you've covered the things that we talked about here, you should be good. But we got 2 months to do that review, and then we need to go and submit our recommendation to SBA along with that application. And then once SBA receives it, they now have 90 days to review, make a decision, and issue payment. And one thing to note, when they do issue payment, let's say you qualified for 100% forgiveness, SBA will include the interest expense as well in the amount that they send us. So like in that situation, all of the loan and interest is taken care of. They haven't really clarified on if only a portion of a loan is forgiven, but what I would plan for if you find out that you don't qualify for 100% forgiveness is I would plan for at least the portion of interest from the non-forgiven piece to be your responsibility, and then the funds from the interest from the forgiven pieces to be SBA's responsibility. And as a lot of how this program works, this is very much we're building the plane around us as we're trying to fly it. SBA hasn't told us how to actually submit forgiveness applications to them. So we can receive them from you guys, but SBA actually hasn't even told us how to formally submit it to them for their clock to start. So as with all of this stuff, we ask for you guys is to work with us and be able to help us with timeframes and things that change along the way. All right, so then a big question that people usually will have is, well, can I apply for forgiveness before the end of my cover period? Because like in the case of this 24-week one, even if you got your loan on the very first day that you could, April 3rd, I mean, your cover period would end sometime in October. So can I apply for, I've already spent the money on where I needed to, I will qualify for forgiveness, I want to apply now, can I? And the answer is yes, you can. So you can, but they do have one little caveat in there, which shouldn't apply to anybody in this case, in this form, or in this webinar, because this is only people that are on the standard form. But yes, you can apply for forgiveness early, but if you reduced wages of any employee by 25%, you must carry through the amount of their lost wages and have that kind of ding against your forgiveness amount for the full 6 months, even though we're only 3 months into it, let's say. So again, it's a yes, and the caveat really only applies to people that are in that standard form, because if they reduce wages by more than 25%, they're not filling out the easy form anyways. All right, so that kind of takes care of the application. Before we get to the question and answer area, I do want to give a couple just kind of PPP updates. So previously the deadline for applying was June 30th. That did get extended to August 8th. And the reason why is there's still $131 billion in funding left. And so why I'm bringing this up to a bunch of people that already have their PPP loans is that there's still businesses and people out there that don't. I actually went and was talking with the business owner last week, and he was asking me saying, hey, so this PPP thing, I think I might want to do this. It's like, well, it's almost June 30th, and at that point they hadn't extended it. And so I said, get after it now, because it's the timing's running out. So there are still of those companies out there, and we want to go and be able to help as many of those as we can. To date, we've been able to help out about 700 customers, and we'd love to have that be even higher. But it still is only one PPP loan per business. And I mentioned the thing about still because there is legislation that's being talked about that could result in additional PPP loans on it for businesses, but only for businesses that are highly impacted by the virus. So think of like restaurants, breweries, ones that had those forced shutdowns and closures, that maybe they could go and get a second round. I only bring that up just so people aware that this PPP stuff is still, a moving target, and there are changes. So things that you need to be kind of just aware of. But we will, if changes like that do happen and become law, we will be sure to go and get that information out to people that it applies to. All right, so then we're going to get to the kind of questions area, and my talk kind of took a little bit longer than I wanted. I will keep going on this past 11, but I don't want anybody to feel obligated to stay if you only were able to allot the hour for this. So as we're going through this, feel free to drop off. All of this is being recorded, so anything that you miss, we will get this out onto our website shortly. So if you missed the last 10 minutes, you can always go and recheck it in as well. But we do have some people following some of the chats, so I'll do my best to answer what questions that we can. And the questions that we can't, what we'll end up doing is we'll add a frequently asked questions area to our website, where we will maybe have to do a little bit of extra research to figure out what the answer is, and then we'll post it out there. So we'll make sure to get you guys that link so you know where to find things in case there's answers that or questions that we can't answer. So Dwayne, if you could, do we have any questions that came in?
Clay, thank you for taking your time and getting that done for us. We've got a lot of great questions that came through here, and I'm going to get to those here in a second. The one thing I wanted to mention to everyone also is you should have received an email from us that basically provided you with your SBA loan number, the loan amount, certain dates to the 8 and 24 weeks. So all the stuff you would need to basically fill out that application, or at least all the stuff that we have to provide to you. So if again you didn't see that email, you can contact your banker and we can get you that information back out to you as well. So let's get to the questions. And there was some great questions in and around the criteria that happened early on. I'm going to skip past those, and hopefully we can circle either back to them or answer them later. But here's a question that kind of came up, Clay. If we receive the EIDL after 4/3, so we do not need to combine, do we still list the EIDL application number on the forgiveness form?
Cool. In that case, yes, you do. So you will, whatever blank that is on the form, you do want to go and put things into there. But the reason why we have the EIDL stuff on there is that it's a way for SBA to connect this customer's PPP loan with the EIDL loan. And the way that if we had a customer that was in that in-between time of January 31st and April 3rd, that it does get combined, we'll still fill out the application just as it states. We'll put the EIDL stuff up above, and we'll put in our forgiveness stuff just like we would if we didn't have an EIDL loan. And then on the back side, when SBA goes and issues their forgiveness amount, when they send basically the money to the bank to pay the loan off, they would net out whatever that EIDL amount was. But that is something that they will do on their side. But yes, we will always put in the EIDL loan amount and application number.
So along the same vein, dental insurance expenses.
Yep, same type of thing. That would follow. Okay. It would mirror how health insurance stuff works. So any dental expense, again, paid by the employer, not by the employee.
Okay, and here's another one. How is the payroll cost calculation impacted if our original Schedule C submitted with the application was later amended or changed? And I know you're not an accountant, but.
Yeah, that's a good question, because I'm not quite sure on that one. That one we'll have to do a little bit of checking. So Dwayne, if you could just kind of jot that one down for one that we'll do some follow-up. Just shooting from the hip on it, the thing that it would impact would be which direction it went. Because if you had, say, more either payroll expense or more income at the bottom, and you would have ultimately qualified for higher loan amounts, but you received a lesser loan amount, then it shouldn't really impact it. But the bigger change would be if it's the other direction, where either your income at the bottom went down or the amount of payroll that went down because that would impact how much forgiveness or how much loan amount you should have gotten to begin with. So you would have essentially gotten more loan funds than what you would have qualified had the return been amended. And so what my guess is, but we'll follow this one up, is that it would, if those dollar amounts were to decrease, so spent less on payroll or had less income for the business, it drops what your loan amount is, it would result in a lesser forgiveness, and there'd likely be a residual amount of loan amount left. But that one we will do some double checking on because there's some extra stuff that goes along.
Is interest on your operating loan, does that qualify for forgiveness?
Yes. Yep. As long as it's a business obligation that existed prior to February 15th. So because that was part of the thing that I tried to kind of show, that when they say business mortgage interest, people automatically think real estate. But if you read into the actual description on the instructions, it does say that it includes both real estate as well as personal property. So things like, chattel, grain, all that stuff would be in that category. So as long as it's business purpose and done and incurred prior to February 15th, then you can include it.
Can you use accrued expenses for interest, rent, and utilities, or does it actually have to be paid?
Yes, you can use accrued. And the way that part works, here, I'll actually run back to that portion of the presentation. It has to do with this one right here. So this is for all non-payroll costs, so it includes both interest expense as well as utilities and all that stuff, that they must be either paid during the cover period or incurred during the cover period and paid on or before the next regular billing date. So in the case of like an electricity bill, where you pay the bill on the 15th, but your loan cover period ended on the 1st, a portion of that bill you pay on the 15th was inside of the cover period. And so then you just got to go through the calculation and say, all right, of the 30 days worth of electricity I paid, 14 of them were in my cover period. I prorate my electricity bill down to 14 days worth and claim that. And then I just got to make sure that for me to include it, I just make sure I pay the bill on its normal billing date. And so that applies to all of the non-payroll costs. So the interest, the leases, the utilities, all of them.
Okay. And there's various other questions. I'm going to ask this one. The third section of the certification section seems to contradict your initial qualifications for the easy application. It says you can't reduce wages, but makes no mention of an exception if you were forced to close down.
Pull up.
I'm trying to, we can always cover that later, but.
And so can you rephrase the question now that I got it up?
So the third section of the certification section seems to contradict Clay's initial qualifications for the easy application. It says you can't reduce wages, but makes no mention of an exception if you were forced to close down.
Yep. And what that really kind of, that's the part with this thing being confusing. What it is there's a difference between when the criteria talk about wages, is talking about their per hour rate. So they're $15 an hour. Not necessarily how much you ultimately paid them, because that's a function of both your rate plus the number of hours they've worked and the quantity of employees. What that criteria 3 is saying is, the wages can be adjusted, and it's in the paid hours and employee stuff, as long as it was due to government requirements. It's okay to have the total wages or the total compensation paid go down, as long as it's a result of paid hours going down or number of employees going down because of following government rules, and not due to dropping people's hourly rate by more than 25%.
Okay. Then I think I'm going to circle back to the criteria 1. So if you wanted to go back up to your criteria 1, 2, and 3 right from the beginning of your slides, this person asks, for criteria 1, if there are 4 owners in an LLC, and all of the owners are employees, can I still answer yes to that question?
As long if they are employees, no. Because in that case, you're not a self-employed individual or a sole proprietor with no employees. So you can't say yes to this one, but likely, unless you don't like the other 3 people on your thing, you probably didn't either reduce their wage or cut their hours, or you didn't even qualify off of those amounts. So you can't say yes on criteria 1, but I'm guessing criteria 2 would probably you'd still be able to say yes to.
Okay. And for criteria 2, does overtime apply for the average numbers paid? From 1/1 to 3/31, we paid more overtime than we did over the last couple of months. Would that mean we have to answer no?
That is an interesting question. That one I didn't think of. So that one I'll have to do some checking on, because I'm not quite sure, because they do give you this specific period of time to compare it to, so you have kind of a baseline. And I don't know what it would do as far as overtime, but that one we'll have to do some checking on, and we'll get back and post it onto that frequently asked questions area, because good question.
And I see we have maybe another message or 2. I'm going to ask this one, see what else we have, and then we'll probably get it wrapped up. But if you reduced the hours during the cover period, but we're back up to normal hours by the end of the period, does that qualify? Or do you need to have the same hours during the entire period?
My gut says same hours during the entire thing, but we will ask that question and post the response out there. But my gut says that it is, you got to maintain the hours. Now, in big thing to remember here is it's paid hours, not necessarily worked hours. So there has been some businesses that they drop their people's days from working 5 days a week to 4 days a week, but using the PPP funds, they still paid them for 5 days a week. So for them, even though their hours worked are down, their paid hours were the same. But assuming that paid and worked hours are the same in this example, my gut tells me that you would not be able to choose that or meet criteria 2, but I will definitely have to double check on that one.
So I'm going to go ahead and thank everyone for being on the call. I need to give a special thanks to Clay for putting this together. I appreciate it. I'm sure everyone on the call has as well. I'm going to ask you one more question, and then I will let you end the meeting, Clay. So is the forgivable loan amount taxable?
So kind of. So the way that the taxes work is, in this one, again, run this all by your accountant, because I'm not an accountant at all. So I can answer this stuff in generalities, but don't sue me later. But the way that it ends up working is the PPP funds themselves are not taxable when you receive them. However, if you claim through this forgiveness application that you use that PPP funds to pay certain covered expenses, so like wages, utilities, and stuff, they do not allow you to deduct those on your tax return. So if you said that you paid $100,000 of wages using the PPP funds, you're not going to get taxed with the $100,000 PPP fund coming in, but you are not allowed to deduct that same $100,000 worth of wages on your tax return at the end of the year. So basically, they don't want you to be able to kind of double dip. I don't really agree with that whole thing, because it essentially just indirectly makes the PPP loan taxed. But that is how it is currently. But again, not an accountant, so please be sure to go and run that one by your accountant, because they will know better than I do.
Okay. Your show, you can wrap it up, Clay.
All right, sounds good. So again, we thank you guys for opportunity of hosting this, and I apologize for going a little bit longer than I had planned to, but I'm sure glad that you guys allowed us to help you out with this PPP loan program to begin with. And now that we're nearing the next phase of it, I thank you for the opportunity to continue to work for you. If you have any questions that come in, feel free to reach out to your banker, or we do have the PPP loans at bankwithpioneer.com. It's always a good option to go and ask those questions as well. So we're here to help. So let us know how we can do that. So thank you, everyone, and enjoy the rest of your day.